The trade war between the US and China has reached a fever pitch. What started as a strategic move has now spiraled into a global economic conflict, affecting markets and industries worldwide. It began with former President Trump's decision to impose tariffs on Chinese imports. This bold move was aimed at addressing the trade imbalance between the two economic giants and curbing what the administration saw as unfair trade practices. These tariffs, initially set at 20%, were later increased to a staggering 34%. The escalation was intended to pressure China into making concessions, but it also led to retaliatory measures from Beijing. Trump argued that these measures were necessary to protect American jobs and intellectual property. He claimed that for too long, American workers had been at a disadvantage due to China's trade policies and intellectual property theft. However, critics warned of potential economic fallout. Economists and trade experts cautioned that the tariffs could lead to higher prices for consumers and disruptions in the global supply chain. The situation has escalated dramatically in recent days. Stock markets around the world have experienced significant volatility, with investors reacting to each new development in the trade war. The global market is reeling from the impact of these tariffs. Investors are worried. Businesses are uncertain. Companies that rely on international trade are facing increased costs and logistical challenges. The future looks increasingly unstable. As the trade war shows no signs of abating, the world watches anxiously, hoping for a resolution that will restore stability to the global economy. China wasted no time in responding to the US tariffs. They slapped retaliatory tariffs of 34% on a range of US goods. This tit-for-tat exchange has sent shockwaves through the global economy. The impact has been swift and brutal. Reports suggest a staggering $6.4 trillion loss in global market value. This figure underscores the severity of the situation. The trade war is no longer a distant threat. It is a present and painful reality for economies worldwide. The trade war has claimed some high-profile victims. Tesla, the electric car manufacturer, has seen its stock price plummet by 8 to 10%. The company relies heavily on imported parts from China. The tariffs have made these parts significantly more expensive, squeezing Tesla's profit margins. This situation highlights the interconnectedness of the global economy. Even companies not directly targeted by tariffs can suffer collateral damage. The trade war's ripple effects are far-reaching and unpredictable. The trade war's impact extends far beyond Tesla. It has sent shockwaves through various sectors of the global economy, affecting industries in ways that are both direct and indirect. The ramifications are vast and complex, touching everything from technology to agriculture, and from energy to finance. Let's break it down sector by sector. Asterisk tech. The technology sector has been one of the hardest hit. Giants like Apple have seen their shares fall due to concerns about Chinese sales. The uncertainty surrounding tariffs and trade restrictions has made it difficult for these companies to plan for the future. Semiconductor companies, heavily reliant on Chinese manufacturing, are also feeling the heat. The supply chain disruptions have led to increased costs and delays, impacting their bottom line. Asterisk natural resources. Oil majors are down, reflecting the uncertainty in global energy markets. The fluctuating prices and trade restrictions have made it challenging for these companies to maintain stability. Agricultural firms are also suffering due to tariffs on soybeans and other commodities. Farmers are finding it increasingly difficult to sell their produce at competitive prices, leading to financial strain and uncertainty. Asterisk banking. Financial institutions, always sensitive to economic fluctuations, have experienced significant stock drops. The trade war has created a volatile environment, making it difficult for banks to predict market trends and manage risks effectively. Asterisk machinery. Companies like Caterpillar, which rely on Chinese demand for construction equipment, are facing reduced sales. The decreased demand has led to lower revenues and has forced these companies to rethink their strategies. Asterisk retail. While some luxury brands have benefited from Vietnam's offer to reduce tariffs, the overall picture for retail remains uncertain. The fluctuating trade policies have made it difficult for retailers to maintain consistent pricing and inventory levels. The trade war is a complex web of interconnected consequences. Each sector's challenges are intertwined, creating a ripple effect that impacts the global economy in unpredictable ways. No sector is immune to its effects. the ongoing trade tensions continue to shape the economic landscape, forcing companies and industries to adapt to a new reality. Section 5. Expert Opinions, Navigating the Uncertain Future. Experts are divided on the long-term impact of the trade war. Some believe that a negotiated settlement is still possible. Others fear that the situation could escalate further, leading to a full-blown trade war with devastating consequences. One thing is clear, the current level of uncertainty is unsustainable. Businesses need clarity to make investment decisions. Consumers need confidence to continue spending. The longer the trade war drags on, the more damage it will inflict on the global economy. Section 6. BRICS, Pushback, a united front against protectionism. China's retaliation is part of a broader trend. The BRICS nations, Brazil, Russia, India, China, and South Africa, are increasingly vocal in their opposition to U.S. protectionist policies. They see these policies as a threat to their own economic interests. The BRICS nations are flexing their collective muscle on the global stage. They are forging new trade deals and reducing their reliance on the U.S. dollar. The trade war has accelerated this shift in global power dynamics. Section 7. Global Market Volatility, a Sign of Things to Come. The recent market volatility is a stark reminder of the interconnectedness of the global economy. In today's world, financial markets are more interconnected than ever before. A single event in one country can send shockwaves through markets around the globe, affecting everything from stock prices to currency values. Events in one part of the world can have ripple effects that are felt far and wide. For instance, a political crisis in a major economy can lead to a sudden drop in investor confidence, which in turn can cause stock markets to plummet. Similarly, natural disasters, trade disputes, and changes in government policies can all contribute to market volatility. The trade war has shaken investor confidence and injected a high degree of uncertainty into global markets. Investors are constantly on edge, trying to predict the next move and adjust their strategies accordingly. This uncertainty can lead to increased market swings as traders react to the latest news and developments. The question now is whether this volatility is a temporary blip or a harbinger of things to come. Analysts are divided on this issue. Some believe that the markets will stabilize once the trade tensions ease, while others warn that we could be entering a new era of prolonged economic instability. If the trade war continues to escalate, we can expect to see more market swings and economic uncertainty. Businesses and investors will need to stay vigilant and be prepared for a range of possible outcomes. The future of the global economy hangs in the balance, and only time will tell how these events will unfold. Section 8. The High Cost of Protectionism, a Cautionary Tale. The current trade war serves as a cautionary tale about the high cost of protectionism. While the stated goal of tariffs is often to protect domestic industries, the reality is far more complex. Tariffs rarely work in isolation. They often lead to retaliation, higher prices for consumers, and job losses in unexpected sectors. The trade war is a stark reminder that in a globalized economy, cooperation is essential. When countries erect barriers to trade, everyone loses. Section 9. The Road Ahead, Towards a More Stable Global Economy. The path forward is fraught with challenges. However, dialogue and negotiation remain the only viable options. The US and China must find a way to resolve their differences without resorting to further tariffs or other protectionist measures. The world is watching. The stakes are high. The future of the global economy may depend on the outcome of this trade dispute.